Welcome to The Explainer. Okay, today we're diving straight into the strategic heart of your business, finance. We're going to shift away from that traditional, sales-only mindset and get into a real masterclass on profit and cash flow. So if you want to take real, calculated control of your business's future, you are in the exact right place. Let's get into it.
Let me start off by asking you a pretty fundamental question. Why do most businesses fail? I mean, if you're like most people, you probably assume it's because they have a bad product, maybe some terrible marketing, or they just got totally crushed by the competition, right? Well, actually, that's a massive myth.
The stark reality here, they simply run out of money. It literally doesn't matter how revolutionary your product is or how viral your social media gets. A lot of entrepreneurs obsess over that front-end flash, right? But they completely ignore the strategic numbers behind their operation. And if you do that, the business dies. Simple as that. The survival stakes for today's explainer are literally that high.
So, here is our survival toolkit for today. We'll cover first, the revenue illusion. Second, the financial building blocks. Third, cash flow and planning. And fourth, smart habits for growth.
All right, let's jump right into part one, the revenue illusion.
We absolutely have to break this illusion that focusing purely on sales, marketing, and vanity metrics equates to actual success. Let's look at revenue versus profit. Revenue is the total money your business brings in. It's that big, exciting number everyone loves to brag about. But profit? Profit is the money actually left over after all your expenses are paid. A lot of beginners focus entirely on revenue, but the smart CEO mindset, they are relentlessly focused on profit.
To put that into perspective, imagine a business does $10,000 in sales. You might look at that and feel like you're absolutely crushing it. But if $8,000 goes right out the back door to expenses just to keep the lights on, well, your actual profit is only $2,000. A massive sales number can so easily hide a tiny profit margin if you aren't paying close attention.
Moving on to section 2, the financial building blocks.
Think of these concepts as the absolute essential tools in your toolkit. Once you grasp these basics, I promise you'll be able to read any financial report with total confidence. Every single business finance system on Earth is built on just 4 key elements. You've got income, which is the money coming in, expenses, that's the money going out, assets, which represent the value the business actually owns, think equipment, inventory, or cash in the bank, and finally, liabilities, which are the debts and obligations your business owes to other people.
Now, those 4 building blocks come together to form your 3 essential financial statements. You have your profit and loss statement, which tracks your revenue against your expenses. Then there's the balance sheet, weighing your assets against your liabilities. And finally, you have your cash flow statement, which shows exactly where your money is actually moving. Basically, think of these reports as the vital health monitors for the living, breathing organism that is your business.
Okay, let's get into section 3, cash flow and planning.
So understanding those building blocks is a great start, but honestly, it isn't enough to prevent disaster. We need to talk about the actual lifeblood of your operation. Here is a crazy thought for you. How can a business be entirely profitable on paper but still go bankrupt? Take a second and just think about that. How is that even possible?
Well, the answer is poor cash flow. Cash flow tracks the actual real-time movement of money into and out of your business. And here is the operational danger. You might make a highly profitable sale on paper, but if your customers pay you late and your own bills are due today, you are completely out of cash. You literally cannot pay your suppliers or your team with theoretical profits. That's exactly why successful businesses monitor this on a weekly basis.
To manage that flow effectively, you absolutely must know your break-even point. This is the exact moment where your revenue perfectly equals your expenses. Now, why does this matter so much? Because crossing this critical milestone is the exact moment mere survival turns into actual profit generation. It's a game changer. It helps you set realistic sales targets and make incredibly grounded, strategic decisions.
Which brings us to our final section, number 4, smart habits for growth.
Now we're shifting gears from financial theory to some really actionable CEO-level habits. This is all about how you actively manage and protect your money day to day. Budgeting like a CEO means establishing a super strict plan for your capital. Let's break it down. Step 1, estimate your monthly income. Step 2, list all your expected expenses. Step 3, and this one is absolutely crucial, separate your fixed costs, like your rent or software subscriptions, from your variable costs, like advertising. And step 4, track absolutely every single expense, no exceptions.
There's a saying, small leaks sink big ships. I really passionately emphasize this because tracking your expenses is vital. It's rarely the massive, obvious purchases that destroy a business, right? It's almost always the tiny, unnoticed recurring costs that slowly drain the hull until you are completely underwater.
So, as you patch those leaks and look to scale up, you're probably going to need capital. Businesses typically grow using one of four methods: self-funding, taking out business loans, bringing on investors, or crowdfunding. Each of these has distinct advantages and, of course, risks. But the cardinal rule for all of them: never, ever borrow money without a crystal clear plan to generate far more value than the actual cost of borrowing it.
To keep track of all this growth, you need the right tools in place. And please, don't overcomplicate things. Utilize accounting and budgeting software right alongside basic payment processors and spreadsheets to improve your visibility. These technologies are literally there to save you precious time, helping you collect money faster and plan accurately, all without getting totally bogged down in manual calculations.
Ultimately, financial success really relies on your daily habits. Review your numbers weekly. Always separate your personal and business finances. Maintain a healthy emergency fund. Constantly look for ways to reduce expenses, meticulously monitor your cash flow, and honestly, just never stop learning. These daily disciplines are going to matter so much more to your success than any complicated financial strategy ever could.
So the bottom line is this: entrepreneurs who master finance gain control, reduce risk, and build long-term wealth. That's the ultimate reward of everything we've unpacked today. Business finance isn't about, being a certified accountant. It's just about understanding the flow of your money so you can make smarter, safer, and much more lucrative decisions.
I'm going to leave you with this final thought to chew on. Do you know your break-even point? If you don't, consider that your immediate homework assignment for your own business today. Figure out that exact number, take control of your finances, and watch your business thrive. Thank you so much for joining us for this explainer, and we'll see you next time. Keep learning.